in not as much detail as I went in on Thursday. Okay, so we're going to do a quick review of the event that was about order flow and how nothing happens without order flow. Uh, those of you that were there probably already know the answer to this. Those of you that weren't, can you tell me what makes price move? What type of order makes price move up and down? No, not noise. I know you're referring to the standing orders, not purchased orders necessarily, market orders. Market orders are what make price move up and down because what the buyer is saying, or the person who is ready to buy or sell an order, is what they're saying is I will take the best price that is available right now. And that price may be a little bit higher or lower than what looks like the current price is. Okay, so you kind of put in a market order, and you're going to get whatever whoever is able to sell at that price or the next best price if your order didn't get picked up immediately. Okay, so market orders is what moves the markets. Okay, market orders will be a completed trade. So we're not going to talk initially about market orders. Okay, what we're talking about is what I think Chart Trader you were talking about, and that is the noise or the limit orders that are set in the bid ask columns. Okay, that you see on your trading dome or on a level 2 um, chart that are resting orders. Okay, so an order is not a fulfilled or a completed trade, and this is what's very important to understand when we're talking about order flow analysis. Okay, it's a trade that hasn't happened yet. Okay, an order is a trade that hasn't happened yet, if it ever happens. Okay, so if you look carefully here, you can see that we have some bid orders here, and over here you see the same numbers. This is our time and sale, or I'm sorry, a level 2 window where we see the limit orders that are resting, that are people are saying if I can get this price, I'll buy this item. Okay, I'll buy this whatever this instrument is. Looks like it was a CL. All right, so I'll buy CL contracts at that price. Okay, so these are how we measure order flow. This is called order book. Okay, this is the order book here. These orders here are called the order book. So somebody's placing an order to say, I will potentially buy or sell at that price. Okay, notice the word potentially. Okay, just because I have an order, if the order hasn't been filled, I have the option of removing that order. I can take that order away. This is very important. When you listen to people talk about order flow trading, it sounds very compelling, doesn't it? If you can get a handle on orders, then maybe you can figure out where the strengths and weaknesses are in the market, where the support and resistance is, where the supply and demand imbalances are going to occur, right? So there are these theories, there are these ways of trading, these strategies that are going to be focusing on these orders. Now, these orders are available for all of us to see. We can all see the standing orders. What do you suppose the market makers think we're looking at? the guys that are trying to take advantage of us, well, no, not trying to, they are every day, all day long. What do you think they look at? What do you think they think we're looking at? Right? So if you're going to be an order flow trader, you're going to probably go online um, and go to a webinar or YouTube, and you're going to start looking at how to trade order flow. And you get these very complex charts with lots of information. Don't we all just love lots of information, particularly numbers, as it relates to trading, because then it gives us some way to quantify what we think might happen instead of trying to figure it out for ourselves based on the fact that what we're really seeing is thoughts, feelings, and emotions that moves price. We would rather think about having lots of numerical information, which removes us from having to be accountable for understanding what makes markets move. Okay, so in these charts, you're supposed to compare all these numbers on each bar so that you can pick up where the areas of potential support and resistance and imbalances in supply and demand. Okay, so that's the whole premise behind order flow trading. Have I lost anybody yet? Is there any explanation needed at this point? Anybody uh, need some clarification on order flow trading? Order flow means that we're analyzing the orders that are being put into the market that are sitting and waiting for price to get to those orders, for buyers and sellers to come to them. Okay, these are not going to be necessarily market orders. These are going to be limit orders that are sitting and waiting. Okay, so that's what we're analyzing, is these sitting and waiting orders, trying to find imbalances between supply and demand. Okay, everybody clear? Anybody have any objections to what I'm saying here? Okay, all right, good. So when you look at this and you've studied a chart and all the numbers on each bar, you are now clearly and succinctly ready to place an order because you are highly confident that you have a strong chance of price moving in your favor, and it's time to hit the old go button, right? You're ready to place a trade because of you may have picked up, well, all of these numbers on this side add up to a different number than all of these numbers on the other side. So supply and demand is at an imbalance. Well, how are you going to measure supply and demand when we know that those orders may or may not be filled? These trades may or may not happen. Well, if you think all of those trades happen, then I got word for you, I got news for you. Does anybody see the problem here besides the obvious? If we look at stuff and we we look at it, videos and webinars, and we go, this sounds really good, this is good stuff, this guy knows what he's talking about, this order flow and order flow analysis. Anybody pick up what's wrong with besides the obvious, and that's that it's difficult to do, takes a lot of time. The problem is orders. Orders, okay, not trades. Trades are what are really what gives us the best information. Orders can be played with. They're easy to manipulate, right? And they're constantly changing and they're constantly being updated, and they may or may not happen. So you see here that the numbers on the left are orders. Well, all of these are orders that might turn into trades, and they might not. And here's how they do it. All right, pay real close attention. The graphic in the middle is actually going to change. All right, so I'm not going to tell you what happened. I think some of you remember this from Thursday, but those of you that weren't here on Thursday, can you absolutely not ever, not unless you have some special way of using that with something else. So no, I would never trust level 2 data. So for those of you that just saw that on the screen, what did you see? I know those of you that were here on Thursday already know what you saw. What did you see? It was fast. I'm going to help you out here because we're going to move carefully or quickly. So you notice the numbers in the bid column or buy column. Notice that number in particular. Now, just half a second later, same price, look at that number. Another half a second later, somebody put in nearly 1,000, an order for nearly 1,000 contracts, and then remove that order. Now, that number went on to your chart if you're a order flow trader. And that created what appeared to be an imbalance between supply and demand, didn't it? Yet there actually isn't an imbalance, but you're going to believe there is. All right. So about 10 years, what year is this? Almost 2019. Yeah, in 2010, they made this illegal. This is called spoofing, right? They made it illegal. Yet here it is right here. And you can watch it on your charts every day. So guess why it happens every day? How many people have been prosecuted? People or companies have been prosecuted for spoofing since 2010. I can tell you exactly one. And it was a guy, a single guy, and they were just trying to find charges to throw on this guy on top of all the other charges. I can't remember what his name is. Everybody knows about this futures trader that bankrupted his company. But these are big fake orders in order to manipulate the markets, to manipulate us, to manipulate each other. Okay, so these guys that write these algorithms fight against other guys that write these algorithms. So for all I know, this spoofing was to get another algorithm to fire off some trades or some orders. All right, so this is order flow. This is what might happen but didn't happen, yet we're supposed to place our trades based on this information. So my question is, what's better to make a decision based on what might happen or what did happen? So I'm starting to blow a few holes in this order flow stuff, right? When you have a decision in life to make, what information is the best information from which to make a decision? So this information might happen. This information from the time and sales did happen. So why am I reading what might happen instead of reading what did happen? Okay. This is real information, not maybe information. It actually happened. So what happens is much more important than what might happen. We make decisions on what did happen and what is probable to happen next. See, we don't want to make decisions on what might happen and what might happen next. Okay. So I used the example the other day about the Katrina uh, hurricane in New Orleans. There was an awful lot of discussion about what might happen for many, 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 many years. And nothing really got done until something actually did happen. And suddenly everybody had all these great answers. Might happen is really hard to pin your hopes and dreams on. Right? So just to be clear, order flow is not trade flow. Trade flow did happen. These are trades that have actually been processed in the market. And the sooner that you stop thinking about order flow and start thinking about trade flow, you're going to start cutting away the ability of these market manipulators to manipulate you into falling for what we all tend to fall for, and that is we listen to everybody on the internet and on YouTube tell us about order flow and how important all of that is, and we need to follow order flow. You can start cutting away the control that these manipulators have over you by watching what they're actually trading, not what they say they're going to be trading. Okay? Whoops. Where am I? Okay. So how do we do that? Okay, so this is how you're going to use a chart to do order flow trading. And you're going to be looking for imbalances in supply and demand. And I don't know if you guys have ever done this. It's it's really hard. And it's very confusing. So instead of trying to read the orders and gain an edge against the market based on these orders. So first you have to see the orders, and you have to, it'd be hard enough if these orders were actually going to get filled and to find the imbalances between supply and demand at a particular price. It's hard enough to do that. But then to have these people jazzing these orders, and they're on and off, and then you have an imbalance, you don't have an imbalance, and then you have an imbalance the other way, all within a half a second. How am I supposed to make decisions with any level of confidence based on what might and may not happen? Instead, we look at the actual flow rate of trades that have been processed through the market. That's the only way to know for sure what the big boys are doing, what the manipulators are doing. What orders did they actually trade? You're the second person to say that. I don't know them uh, personally, or I've heard of the company, but I don't know anything about them. So you give these manipulators their control, but you take it back when you actually follow what they're doing. Okay, and that's what you see here. This is our speed tick indicator. We're reading the rate of orders right here. We're reading the rate at which orders are being processed, right? The rate at which orders are being processed. When they reach a rate that is faster than us little retail guys could do it with our little laptops on our wireless internet connections 10,000 miles away, or whatever, thousands of miles away from the exchange, there's no way we can place the type of orders, or place the number of orders at the rate they're being processed. Therefore, it has to be the big boys doing it, right? So I've talked to you about all of this just to tell you about the speed tick indicator, to show you the speed tick. This is how to measure trade flow, not order flow. And this is an extremely important indicator. It measures the rate of actual trades processed in the market. A lot of time order flow is a smokescreen for trade flow. It kind of throws us off. All right. And it's not just for us. The market makers do it to each other. So what we're looking at is a rate of orders being processed. The rate at which the orders are going through, and we know if it's a certain speed, it can't be us. It has to be the market makers. That's how we pin them down. That's how we know what they're doing. And we know what they're doing, and the reason we want to know what they're doing is because they're always doing it to create a reaction. So we can make our trades based on what did happen rather than what might happen. All right. So when the flow of processed trades exceeds the rate at which us little retail traders could physically trade, then we know that they've been at it. Okay. And that what they're doing, they intend to have an effect on us. All right. So this is our speed tick indicator. Now down at the bottom, this is what we call our speed tick level. This is what we're using, these different levels here, these standard deviations, that when price exceeds, or the rate at which, I'm sorry, the speedometer, the rate at which the orders are being processed through the market is so fast, it is unlikely. See, down here, it's likely that price is being moved around by us little guys. Or we're in a time of accumulation or distribution where the big guys are doing a lot of buying and selling, but they're doing it very slowly, very quietly. And then suddenly this happens. Okay, so this manipulation happens. And this is how we know. And it's very common. See, they do this because it's very common that price is going to have some sort of a pullback before it continues. See, we have a nice downward trend here. So we're pushing, and then we get a pullback. And then we're pushing and we're getting this manipulation, and then price pulls back, and then we get this manipulation, and then price pulls back. Okay, so this is why we're measuring the speed of orders being processed. All right, so that was our very quick recap of Thursday. So now let's talk about volume. As long as I'm poking a few holes in some conventional wisdoms and trading styles, let's look at volume for a minute. For those using volume, quickly tell me why you use volume. And this isn't a trick question. I really want to know. I don't, and I'm not looking for, I'm not looking to pin you guys down. Don't assume I think it's a bad idea. I just want to know why you think it's a good idea. Nice, Jim. So what are we looking at with volume? Here's why I looked at volume. And I looked at volume because I heard that volume was important. And I heard that I needed to know it and watch it. And I felt like if I didn't watch volume, I couldn't be a real trader. Kind of like I used to have. I fell for everything when I was struggling for many years. I don't know if you don't know my past. I was a failed trader for 7 years. I wasn't even struggling. I was just horrible. I kept jumping from thing to thing. I kept believing everything I heard. I kept thinking that I was the dumbest person on the planet. And so everybody else that wrote in trading forums and made videos was so much smarter than me and knew all about why would they be writing in forums and making videos if they weren't much smarter than I am. And at one point I saw a guy who had like I don't know, a whole wall full of monitors. And I thought, well, that's what I need. I need a bunch of monitors for all these indicators that I need to place one profitable trade. That's all I wanted to do eventually. I just wanted to somehow end the day regularly as a winning trader. And at the time I thought I needed 12 monitors. Well, a lot of those monitors had lots of different volume, different types of volume indicators on them. So I had volume, but I never really had a yes no type of an answer when it came to volume, meaning that I could read volume and saying, with this volume, this level of volume, these level of trades coming in, do I have something that I can say yes or no, it's time to trade, or this is a good trade to take? Or do I just have kind of an area that say, yeah, this is kind of good, yeah, maybe not so good? Okay, so that's what I found when I decided to start thinking for myself and stop listening to everybody else in the trading world that was so much smarter than me. I started thinking about, well, what exactly is it that I need volume to do for me? Well, what I'm looking for, what I decided I needed was yes, no decisions for my indicators. I don't need an indicator to tell me, yeah, we're kind of in a good area here. We're kind of not in I want an indicator to say, yes, this is a good time. No, this is not a good time. Well, volume didn't really do that for me. It kind of lots of shades of gray. All right. We all hear about volume. As soon as we start trading, we hear that volume is so important, and volume is important. But what kind of volume? What do you suppose the big boys think we're all watching? What do you suppose the market makers, the quants, the HFTs, the hedge funds, what do you suppose they think we're all watching? If they think we're all watching, what do you suppose they're going to do about that? Well, that could be a volume that a breakout could be based on volume, and it could also be a reaction to something that has happened in the market that the market makers have caused. Okay, the market makers love to create breakouts just so they can trap people. And I've explained that before, and if you need more clarification on that, I've got some information for you, Rose, if you want to uh, if you I could show you, or maybe I could tell you later, um, how they create breakouts so they can trap us and and take us out very quickly. And think about, and I know you've been here a few times, but think about what happens on a pullback. And I've showed you the graphic last time I think you were here, not Thursday, but the time before. I showed you that graphic where we get a lot of accumulation distribution, and suddenly there's a breakout, right? And then price breaks out and it starts hauling butt one direction, and all of a sudden, whammo, it stops and it goes the other way. It was a trap. It's a breakout trap. They know exactly when to spring the trap on us. Okay, so nobody ever taught me the best way to read volume, and this is the problem that I ran into, and a lot of you that come to my webinars have seen this before. And it's about orders coming in, but it's also about volume. I'm looking at a chart, a trading chart, and I look at a chart and I see these two bars. And I look at these bars, and from what I can tell by looking at those bars, they are exactly the same. The exact same thing happened. Those are the exact same bars, because all I'm interested in is high, low, open, close, right? That's all you get when you look at a static chart. So when I'm looking and I'm analyzing charts and I'm scrolling backwards on my static charts to try to figure out trade setups, which we all do, right? We all think that's how you're going to do it. And I did it for so many years. It just seemed like the natural thing to do until I realized that yeah. Okay, well, let's say that they're exactly the same number of trades. Yeah, exactly. And we little guys don't really know about that stuff. We take for granted what we hear because we're all trying to learn from other people rather than take and I'm not trying to do something here where I'm trying to force some information down your throats. What I'm trying to do here is get you guys to think outside the box. Get you guys to think on your own. Get you guys to understand that what we think we know may not be true. When I started thinking on my own, I started finally seeing some success. All right, this is the stuff that I share in our aha moment sessions for our Einstein members. Okay, so let's look at a couple of bars. These are identical bars, as far as you can tell just from scrolling around. But let's actually look at how the bar was formed. Okay, so we have ticks coming in. We have some sell ticks. We have some buy ticks. And the ticks come in, and that's how the bar was formed. Okay? So when we look at a bar like this, we kind of figure it's something like this. And we call this a no churn bar, meaning that nothing really specific happened to lead us to believe that something else is about to happen. Okay? Let's look at another bar. So let's look at how the orders came in. Same number of orders, same volume. It's the same volume. But let's look how the volume came into the bar. Much different. We now have a churning activity inside this bar, meaning that at one point through the bar, at some price level on that bar, the buyers and sellers began really getting scrappy with each other. And the buyers and sellers are in disagreement. The sellers are sitting up there waiting. The buyers fell right into their trap. Now the buyers are getting exhausted because they bought so much to get to that point. So we get a churning activity. A churning activity means that, like right here, price, pretty much everybody was in agreement until wham, we hit this trap up here where buyers and sellers are now, the buyers are still happy to be buying, but the sellers are jumping in here. So now the churning is a lot of buying and selling. There's no churning here. It was mostly just buying here. There's no churning here. It's mostly selling and then mostly buying and then mostly selling. There's no real churning. So the churning is the buying and selling, buying and selling, buying and selling. That makes sense? Yeah, exactly. Exactly. It's like running in place. Thank you. So when I'm looking at volume, both of these bars have the exact same volume. Both of these bars are generally the exact same volume of buyers and sellers. So how good is the information of just counting buyers and sellers. Maybe we're missing a big part of the picture here. If we have a better understanding, if we read every tick that comes in and we pick up this activity where the sellers are waiting for the exhausted buyers to finally get to them, and we get this churning action. Now, when we have this churning action and we know that sellers, the buyers have been buying, what happens when buyers just continually buy and buy and buy and buy and buy and buy? What happens? They get exhausted, right? We start running out of buyers. And the sellers now see an opportunity. So right here on this up bar, I have a very strong idea. I have very good information that tells me the sellers are about to take over because the buyers are exhausted and the sellers are just now jumping in. Make sense, everybody? So what we're looking at with volume is not just numbers, but how the volume comes in. So much more important to know how that volume is coming in rather than just what the volume is. I can't find anything actionable. I might use volume to help me qualify other things. Well, these are two different bars. These aren't one right after the other. Okay, these are two on two different parts of the chart at different times. The lower example, the first example, oh shoot, sorry. What's the difference? There's no way. Now, the net result, here's the difference. I'm trying to find a place that I have a high probability of price doing something expected. So the first one, the net result was the same, but I have no real strong information here on which to place a trade. Okay, so that's the difference. The information I have here doesn't really tell me enough. So this would not be a bar that I would say I would qualify a trade setup. The net result is the same. I just don't have good information to place a trade. Here, I do. I have really good information that we're going to become exhausted. Okay? The churn bar and a lower time frame seems the same. I'm not sure what I understand, Phil. At a lower time frame, what's the difference by looking at just faster? The markets, the lower time frame. Okay, so here's the thing about trading on a lower time frame. What do you think the big boys trade in? What time frame do you think the market makers trade in? Why do you think they own supercomputers and place them inside the exchanges? The guys that are, thank you, Marshall. Now, there are traders for sure that trade dailies and hourly and 30 minutes. Sure, there are traders. The guys that are manipulating the markets, for the most part, are doing it in milliseconds. Now, here's the thing. There are firms, quants, all of the market makers. There are those that do it on a longer time frame, sure. The longer the time frame that you're trading, the more speculative that trade becomes, because during that 4 hour or daily or 30 minutes, how many different millisecond market makers can totally change what the others had done or what the others were planning? How many of those market makers that are trading in milliseconds can come in and completely change what you think that you were doing or waiting for? Dozens over that period of time. So what makes you believe that they're not going to have any effect on the market? The longer you're in a trade, the more speculative that trade becomes, because the market makers, the big boys, the smart monies, can do anything they want during the period of time that you're sitting there in the market hoping that the trade goes in your favor. Now, the other reason that it becomes more speculative is because of emotions. What do you do when you're supposed to ride the pullbacks, the consolidations, and you're expecting to be in a trade for 4 hours or for a day or for 30 minutes? What do you do when price starts to go against you? Yeah, I mean, I started trading time. You panic. I started trading time a long time ago, and I prefer them to tick charts. But honestly, Jim, I could change tick charts as long as it's a fast tick chart. I could change to tick charts very easily, but time is still a component on tick charts. I would never trade removing time as a component of my trading. Like I would never use a Renko or a range bar or something like that. That thing they call noise is actually fantastic information for me. Gives me a better understanding of what's going on. So everybody clear now? I mean, did I answer everybody's questions? I don't usually sit and answer questions during these presentations, but I felt like this would be a good one because I'm kind of punching some holes in some things that you might believe to be a truth based on what you've always believed. Now, I have managed. You still have to assess supply and demand. Yeah, and that's exactly what we're doing, Jimmy. We are assessing supply and demand. And you know how we're doing that. We're doing that with this exact indicator. Now, that's another. Have you seen? I've done a webinar on volume spread analysis. It's actually, if you just go onto YouTube and Google volume spread analysis, it's the first thing to come up because it's very well received um, uh, video. It's the highest rated video on volume spread analysis. If you haven't seen that, Jimmy, go watch that, and then you'll understand the supply and demand and how it works and how we are on top of supply and demand by watching what's going on using volume spread analysis. Okay, go Google it, and you'll see it, and that'll answer your question. So we are actually very aware and very on top of supply and demand. What I say about Renko, I hate them. I don't like Renko bars and I don't like range bars because they remove time as a component of trading, and people do that because they make real pretty charts, and they say, well, we're removing the noise from the charts, and the noise is time. And to me, time is everything, especially this day and age where the market makers are operating in milliseconds, and I can, with a high degree of probability, figure out what's likely to happen next based on what's happening right now. Well, there is no right now with Renko charts. There's only a set of bars. Okay, so you're sitting there and you're looking at a bar, and you may be looking at the same bar for 2 seconds or 2 hours. So I don't like them. I know people use them, and I know people use them successfully. I'm not saying you should never use them. Tick or minute charts. I prefer time-based charts, but tick charts are fine. I have no issue with people using tick charts if they prefer them to time-based. I've just been using time-based charts for so many years. That's where my level of comfort is. As long as you use a very fast tick chart. All right, so let's move on, and I'll take more questions later. All right, so you're starting to see the holes that I punched in a few of the, conventional wisdoms in trading. So how do you actually use this information? Well, I've only showed you a couple of the trading styles or strategies that a lot of people use for trading. Now I'm going to show you how we pull them together with the rest of our indicators for which we have won awards, and show you that a confluence of the best of the strategies is what you're looking for. Okay, so our indicators, first thing we're going to do, we're going to look for momentum. Why are we looking for momentum? Not because of the breakout rows, which a lot of people are looking for momentum so they can jump on a breakout. I'm going to tell you that momentum precedes exhaustion. So if I can find the momentum, I can see the strong push, I know that exhaustion is imminent, at least some exhaustion. It may be a pullback, it may be a retracement, it may be a consolidation, or it may be a reversal. I don't know. But if I read momentum, I can anticipate exhaustion. With measuring the trade flow, not the order flow, but the trade flow, I can anticipate where the big boys are trading, what they're doing. With the volume flow, I can anticipate weakness in an uptrend or strength in a downtrend. And then I factor in divergence, which is when price and momentum no longer agree with each other. When I can go through the list here and I can check each one of those off, I say, okay, I have this condition, I have this condition, I have this condition, I have this condition. Bam, I'm going to trade it. Remember I said shades of gray. We don't trade shades of gray. We have yes, no answers. Yes, we have strong momentum. Yes, we have a strong potential for exhaustion. Yes, we have a strong trade flow that suggests that the bar is manipulated. Yes, we have a volume flow indicative of price stopping and turning. And we have momentum has changed directions before price has, because price will always try to catch up with momentum. All right, so let me show you what this looks like. Many of you have already seen this. Oh, shoot. Hold on a second. Let me pull that up again. For some reason, if I minimize it and then maximize it, it gives me a clear window. All right, a lot of you have already seen this. And I could go and I could set up a different video for these trades and show you different trades all the time over and over, or I could just keep showing you the same ones. It doesn't matter. Why? Because we keep trading the same thing over and over and over again. So on the left, you have what you guys would see on a chart if you didn't have our indicators. There's really nothing real actionable here. On the right is an actionable indicators. So I'm going to pull this slide and I'm going to show you some trade setups. Now, remember, what was the first thing I said? I said I want the potential for exhaustion by measuring momentum. Look at the strength of this push up. these bars are turning, they're black, and then they start turning a lighter color to tell us that exhaustion is imminent. Then we get this sudden strong push with this speed tick, suggesting this bar has been manipulated. Now, if it's been manipulated, that means they're doing it for a reason. Now we have on the open, I wanted you guys to see where this printed on the, I can't scroll it right to it, but on the open of this bar, we have a divergent condition. Right here was that pullback alert that said we had a churning activity inside this bar. Right here at the open of this bar, we have a rock star. This rock star tells us we have a confluence of manipulation and divergence. There was sell order right here. We put on a sell order, and down it goes. All right. And we do the same thing over and over and over again. This particular bar is black, it's overbought. That's this pink outline. That's showing that there's going to become a weakness in this uptrend. This uptrend right here is getting weak. There's another dot. We have the volume inside this bar. It was strong with the buyers. We got up here in this area around 73.60, and the sellers started getting excited and jumping in. And now we've got the buyers and sellers, buyers and sellers, buyers and sellers. This bar opened with divergence, shorted it right here. Down it goes. Same thing. You're going to see, I could just keep showing this all day long. This is what we trade all day long. Bought it right here. And really this is my sweet spot right here. This is what I know with a high degree of probability is going to happen. Beyond this, I didn't know it was going to do this, but I had a real good idea it was going to do this. And that's my sweet spot right there. All right, that was a quickie. Notice the big push. Look at the bars going from black to gray to almost white. When they start getting white, we don't get a lot of these. When they start getting white, we know that a pullback is coming. It's imminent. It's going to happen because price can't keep pushing like this. It won't. It never has. It never will. We got a rock star here, shorted it right here. And that's all I need right there. See that? That's it. That's all I need. That's my sweet spot. I don't care what happens after this. It could keep going. It could pull back or continue on the trend. I don't care. Any questions that I can answer on these trade setups? They're yes, no answers. Do I have a trade or no? You notice something else. Two things, actually. The indicators are printing on the current bar, right? There's no repainting of indicators. They print on the current bar as soon as the condition exists. And there's nowhere else to look. They're only looking right where my eyeballs are. So all of my decisions for trading are made right there. I'm looking at no other time frames, no other charts, no other indicators. That's all I need right there. You can have too much information. They are not lagging. They print as soon as the condition exists. And we do that by measuring every single tick that comes in. There are people that use hotkeys, Rose, and you would just be wise to practice using hotkeys. I use a mouse because I've been doing it so long. I'm really good at it. It's just like one of those things that you do every day, all day long. you just become good at it. You become very proficient. Um, if you wanted to use hotkeys, that would be totally up to you, but you can do it with a mouse. Yes, I am. I have in the bottom right corner a countdown timer so that when price is doing this, hold on, let me see if I can back this up a little bit. So when I'm right here and I see this, I see, okay, I'm looking at momentum, check. I'm looking at a strong potential for exhaustion, check. I'm looking at a manipulated bar, check. Okay, so I've got a countdown timer right here. I don't have it on this, but in the trade room, we have a 60-second countdown timer so that I know when the next bar is about to open. So I can get my mouse on the trading dome at about this price. You know, I'm just having it kind of resting on my trading dome right around in here. And I wait for the open of the bar and bam, I'm in. Now, here's the cool thing. So this bar opened and popped up like this, right? I will short it up here if I can. So if I can get a better fill, I will. And then down it goes. Or that one went down a little bit, but it actually, I don't know if it's a winner or a loser. The next one was a winner. Yeah, we take losers, by the way. We absolutely take losers in the trade room. Yeah, this is a 1-minute chart. Any questions about what we're doing here? How about this one? How will you ever have time to learn this? Well, for one thing, it may look intimidating because of the little doodads on the screen, and you think, oh, I'll never be able to do that, and oh, I'll never be able to trade that fast, and oh, how would I ever use the trading dome to do that? You actually can. You absolutely can. Marshall, where are you? You still here? I know. I think that was you're the one of the only ones I saw from the room commenting. You practice, right? You use the fast forward program to practice. I don't know who else is here. Anybody else here that uses the fast forward program to practice? It will not disappear. We did have a bug. We had a bug in it at one point, but that's been fixed, and that was only a bug. It wasn't a change in condition. Um, but no, the current version does not disappear. Once it prints, it stays. Now that okay, so I say that there is a setting inside the Rockstar that um, allows it to turn off after a certain number of bars. And I do that on my charts because I don't like to have a lot of clutter on my chart. So once it's rolled off 8 bars, then it'll just disappear. There's another time that it can disappear. If you refresh a chart, because of the way NinjaTrader does it, if you refresh a chart, NinjaTrader, so that it can refresh more quickly, only reads high, low, open, close of the bar. It doesn't read all the intra-bar data. So if something intra-bar triggered the Rockstar or any divergence indicator, it's not going to show up on refresh of a chart. Okay, so you can probably 30–40% of your rock stars on a refresh won't show up. It's all NinjaTrader. Yeah, it's a NinjaTrader, but NinjaTrader is free to use. You can trade any platform you want and just use NinjaTrader for charting. It's free. All you got to do is supply data, which is cheap. So yeah, I encourage people to use we have a lot of people that like they have a brokerage, they're with TradeStation or AMP Futures or something, and they can't use NinjaTrader for placing their trades. And for some reason, people still think IB or IQ. That is who is that? Yeah, I think that's fine. Uh, we have indicators for both, but we're only developing now for NinjaTrader 8 forward. So the Rockstar and a couple other indicators are relatively new. So we're only developing for NinjaTrader 8. So the Rockstar, those other two indicators are only on NinjaTrader 8. So you want to learn how to do this. We have a self-directed training program for you called the Fast Forward. You can go in and we actually teach you how to practice your trading, how to use market replay effectively, um, how to set up the charts, how to do the trade setups. We have videos for all of that stuff, and we have tools to help you with that. We do provide you with the recordings of every day in the trade room. We provide you with a potential trade setup report. So what that is when I'm sitting and watching, if I place a trade, I'll go onto this report and I'll just say what trade it was and what instrument. Sometimes there are setups that I don't trade, but I know other people do, and I'll put those on there also. That's why it's called a potential trade setup report, so that you can go in and you can see, well, what did Tony do today, or what did they do today in the room? And you can look here and you can go, okay, I'm going to go on the video and I'm going to look at that time on the video and I'm going to watch that trade setup. Then you set up your market replay and you set up a chart and a trading domes and you practice. You practice those trade setups. So that's all part of our Fast Forward program. So we've got some specials for you today. We actually did an event last week, and it wasn't really much of an event. It was just a recording session for some videos that we're going to be putting on YouTube. And so Connor just extended that. We had some people who wanted to put it off until this week, and so we extended it to this week. We've got, ideally, most people want to go in for the Einstein because it's everything. It's a one and done. You end up with all of the indicators we have now, all of the indicators that we ever develop in the future that we use in the trade room. You've got unlimited access to the trade room. You've got unlimited access to the Fast Forward program. We call it the one and done because there's nothing else. Anything else that we develop that we use either in the trade room or it's a training program, you get it for free. That's the beauty of being Einstein. We also have a weekly mentoring session that I talked about a few minutes ago about some of the epiphanies I had when I decided to start thinking on my own instead of trying to learn trading from all of the gurus out there. So we have the Einstein program. Now, I know a lot of people can't just jump right in. So you may want to ease into it and start with either our Brain Boost or our Scholar program, and then potentially upgrade at some point. We will give you credit towards an upgrade if you would prefer to start that way. Of course, you don't get unlimited everything. You don't get all the indicators. You don't get, we tried to figure out a way that people could step into doing what we're doing at whatever rate they're comfortable with. We have noticed that the people that are generally more successful they kind of jump in all in, and then they're committed. They make a commitment to be all in, and they're more committed to their trading. We just noticed that those people that do the Einstein, which used to be called the VIP, same thing, are more committed to learning and working at their trading than people that just kind of stick their toe in the water. So it's up to you guys. We know everybody's coming from a different direction, different needs for their trading. We're all different, so we try to make it so you can get started at whatever level you're comfortable with. We do have a lot of references, a lot of people that will be happy to talk to you if you have questions. Um, can still use the PayPal. Thank you. We do have the PayPal 6-month no payment. Only a few vendors that do what we do have been approved by PayPal to do that, but we have such a good track record with PayPal that they've given us the opportunity to offer the 6-month no pay to our customers. So a lot of people like to take advantage of that and get up to speed for 6 months before making any payments. Are there any questions now? I'm happy to take questions for as long as you have them. And you guys have been a really good crowd. Uh, appreciate you're sitting and participating. That is it's a little helper tool, Rose, and that stands for Open Target Stop, OTS. So if you may have noticed on some of our charts, there's a little on the right side, there's 5 arrows that pop up. And then after 15 seconds, they disappear. All that is a very quick qualifier so that I can visually see where support and resistance is relative to the open of the bar so that I'm not taking trades. I may have a certain trade setup that requires that I have support within 5 ticks of, of the trade. And rather than counting ticks, 1, 2, 3, 4, 5, that takes too long. If I can just visually see, okay, that arrow is too far from that line, I can't place the trade. Okay, so it's just a little helper tool. Yeah, a lot of people use it for Forex. Yep, a lot of people do. Do you trade just Forex or Forex and futures? Because we have a version that works just on Forex, and then we have a version that works on both. So ask Connor about that if you want to look at the Forex version. You can just send to the support at theintentionaltrader.com and we can get back to you on that. Any other questions? I'm visiting in Southern California this week, so got some beautiful weather here. I left Atlanta, which is cold and rainy and nasty, and came out here to Southern California, at least until Monday. Headed back Monday night. Direction, ETS, 3 times bulls, 3 times bears. I'm sorry, I don't understand the question, Daniel. Yeah, that's where we are in Orange County. We're flying this time. We'll be driving back out here in the spring, leaving Georgia sometime in the spring, driving back out here. We live kind of half the year out here in Southern California, and where our daughter, son-in-law, and our new grandson live. So we kind of just travel around a lot. So we're just here visiting, doing an early Christmas here, and then back to Georgia to spend it with Connor. No, don't Google it. Go to YouTube, Jim. Do a YouTube search on volume spread analysis. Yeah, that's the second biggest search engine on the internet is YouTube. Yeah, yeah. Man, he's a smart guy, and he works with a smart guy, Tom Williams, and I find what he does very confusing. But he also does it on a different time frame. So I can't seem to get a handle on it. Never could. But it's what got me interested. Yeah. It got me interested in learning more about it. So I listened to him a lot, but I thought, man, it doesn't have to be this hard. I don't think. Yeah. That's funny. Well, great. Well, let us know if there's you have any questions, or you're ready to get started. Just let us know. We're here to help. Yeah, that's what's reported back to us. Marshall's one of our traders in the trade room. That's typically 80% winners is very typical. I'm not claiming that. I'm only telling you that that's what's reported back to us. Um, and you saw the disclaimer at the beginning. Don't believe anything I say and don't ever trade because it's a bad idea and you're going to lose all your money. There. Take that. All right, everybody have a great weekend. Thanks for coming. We will be sending this video out as soon as Connor has it rendered and edited. Um, so thanks for coming. Have a great weekend. If we don't see you next week, have a nice holiday season and maybe we'll see you next year. All right, bye everybody.